Welcome back, fellow citizens, to our channel. Today, we embark on a journey through the corridors of history to shed light on a critical aspect of the United States economy, the Federal Reserve Act. Join us as we explore its origins, its impact, and the controversy surrounding this pivotal legislation that shapes the nation's financial landscape. The early 1900s were marred by financial crises, economic instability, and a lack of a centralized banking system. In response, in 1913, the Federal Reserve Act was born. The act established the Federal Reserve System, with its primary goal to stabilize the economy and regulate financial institutions. President Woodrow Wilson signed the act into law, forever changing the landscape of America's financial structure. The Federal Reserve became the country's central bank, responsible for setting monetary policy, supervising banks, and ensuring a stable currency. The Federal Reserve System is composed of 12 regional banks, with the Board of Governors overseeing its operations. Together, they wield significant power in shaping the country's economic trajectory. One of the Federal Reserve's key responsibilities is formulating and executing monetary policy. They control interest rates and influence the money supply to maintain a balance between inflation and economic growth. Another significant aspect is the money creation process. Through fractional reserve banking, commercial banks can lend out more money than they hold in reserves, thereby expanding the money supply. The Federal Reserve has been criticized for its lack of transparency and the secretive nature of its decision-making processes. Some argue that the Federal Reserve's policies can exacerbate economic inequalities and favor certain industries over others. There are ongoing debates about the Federal Reserve's independence and whether it is influenced by political pressures. Over the years, the Federal Reserve Act has faced both support and opposition, leading to debates on its role and effectiveness in promoting economic stability and growth. Since its inception, the Federal Reserve Act has played a crucial role in steering the U.S. economy through various challenges, including recessions, inflationary pressures, and financial crises. The Federal Reserve's response during the 2008 financial crisis helped avert an even more severe economic collapse. On the other hand, some argue that the prolonged low interest rates have contributed to asset bubbles and risky behavior in financial markets. As we look to the future, questions arise about how the Federal Reserve Act will adapt to an ever-changing economic landscape. Calls for increased transparency, re-evaluating its dual mandate, and enhancing its communication strategies are some of the topics gaining attention. The Federal Reserve Act stands as a cornerstone of the American economic system. Its impact on our lives is profound, shaping the direction of our nation's financial journey. As we move forward, it's essential to have open discussions and debates about its role, ensuring a strong and stable economic future for generations to come.